Good day, everyone. Welcome to another lesson where we are going to look at the last two patterns that we have in our series. So the first one we are going to look at is what we would call a falling wedge, which is a continuation bullish pattern. So you have price in an uptrend, then price becomes trapped between two lines or 2 points whereby you have got resistance and support. Now, unlike the triangles that you usually find, a wedge is usually long or it takes time to form and resolve. So you can have a wedge that starts forming and maybe it will go for maybe a few weeks or even months. But then when it breaks, it represents a good opportunity for price to rally in the continuation direction. In this case, we are looking at the bullish direction, so it will be continuing upwards. In terms of setting a target, you can measure the distance from the point when the price rallied into the wedge, and then the price it rallied down and met the support level. So that distance is then projected at the point of wedge breakout to determine the amount or the size of the increase that the price is going to have from the breakout point. So this would be, so when you hear of a falling wedge, you must think that the price is bullish. Usually when people hear falling, then they think price is going down. But for a wedge, falling, it means it's going to resolve to the upwards. Now the next one we are going to look at is a rising wedge. A rising wedge is associated with a bearish price movement. So again, you have price rallying downwards, then it hits a support point, then it starts moving upwards and it hits resistance. So the two lines sort of move towards a convergence. But unlike the symmetrical triangle, you do not get the lines forming a perfect triangle before the break. If we extend these lines, they'll probably go all the way before they meet. However, wedges resolve much quicker before the lines are able to meet. Usually they take time, but once broken, they provide a good opportunity for price to move nicely to the downside. Sometimes you would find that wedges fail as well. So this is something that you need to consider. Like this falling wedge, you might be expecting to break to the downwards. But then because maybe there's some news or something happens, then you have price resolve and it turns and it moves upwards again. So it's all about managing your risk and reward and always watching to see what the market is doing rather than expect it to do what you're expecting it to do always. These patterns give you a good entry point and an exit point with a profit. They are not guaranteed that every time you see them, they're going to do what you expect them to do. So you need to always be on your guard if you are trading or investing using them. But usually the longer the time frame that you consider these chart patterns, the stronger these patterns would be, and also the more reward that they would provide as and when they are resolved. So in the next lessons, we are going to look for real chart patterns whereby we open our trading platform and try to identify these patterns that we have spoke about so that you can also be able to look for them on charts. Thank you.